Good afternoon, everybody. I know when I'm on my remote computer, my travel computer, sometimes there is some sound issues when I do the afternoon meetings and I'm streaming at the same time. Here's the YouTube link in case that sound is better for anybody or worse. I don't know. But I'm going to be on this computer this week. But this is the last afternoon meeting of this week and next week. Um, all right, let's do it. I am an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is roughly the same as it was yesterday. A week from tomorrow, I'm planning on doing a happy hour in Los Angeles. A few guys emailed me. It'll probably be small. But if you didn't email me and you want an invite, then email me because otherwise you're not going to get invited. Even if you think I know that you live in LA, maybe I do, but assume I don't and email me because otherwise you're not going to be invited. Probably small, I don't know, 5 to 10 people. I'm still trying to figure out where. Probably just a random bar. I just don't know LA super well. I know traveling can be really hard in Los Angeles, so I'll probably just try to choose a location that's honestly somewhere close-ish to where I'm staying, but do it early enough that maybe people can beat that traffic. Probably nothing too fancy, just a bar or something for some drinks. If I can get a better idea of the head count, though, that would make my life a little easier. But I think it's going to be small enough where I don't even. I mean, I'll try to make a reservation or something for somewhere, but I don't think it's going to be more than 5 to 10 people. All right. So with that note thrown out there, let's look at the market. Spies down. You heard that right. You had a negative day today. It didn't feel like it almost, though, to be honest. Like there are pockets where of weakness that were out there for sure in certain stocks. Like Tesla was super weak, but it still felt like we had a lot of dispersion under the surface. Those semiconductors were still really strong, though we had decent rollovers in them. We can take a look at those charts in a second. But yeah, a decent sized read day. Q's down a full percentage point. IWM down a percentage point. TLT was up, so we were full trade coming in. Gold did not participate with that fear trade today, which is interesting. IBIT is also super interesting because it was like this IBIT was working when the dollar was getting weaker, um, but is not working as a safe haven for geopolitical stuff at all. I guess if nuclear bombs start flying off, you're not going to be able to get your Bitcoin out from its cold storage hard drive to be able to buy food at the end of the world. Yeah, so that one's not working as good. Um, what else? Oil, big up, 5% up. Got above Friday's high today. So oil might be starting to tell us a little bit something more than the market, to be honest. I think we finished down a percent in the market, but I feel like the market is not really going down at all compared to how oil is moving up on the Iran situation. All right, so let's take a look at the technicals, analyze what happened a little bit today. We still line strong for the majority of the day. We started seeing bad headlines come out last night. The most notable was Donald Trump coming out and saying if you live in Tehran, you should try to evacuate. So it did bring the futures down a bit last night. But by the time the market opened, we were off of lows, and it just seemed like it was same old, same old. And despite all of the um, escalation that kind of occurred last night, we almost went green today. We as far as I can say, we basically filled the gap. We didn't get to exactly the closing price of yesterday, but we got to like the gap fill, like end of the support of the range that we were in yesterday afternoon. We basically filled the gap as far as I'm concerned. So it shows you how strong we were. And then we were going sideways. And it was just one of those things. It's like the market can't go down. We also had a bad retail sales number this morning, by the way. Market didn't go down on that for more than a second or two. Um, Bad retail sales number, escalation with the Iran situation. Market does not care. It seemed like we were just going to go sideways and have a pretty tight day, which is par for the course in front of a Fed day. The day before Fed day can usually be pretty boring. Um, the few hours before the Fed announcement, by the way, which will be tomorrow, is also usually pretty boring. You want to try not to overtrade or turn that sort of trading post action, I should say. And then this afternoon, we started to roll down a little bit, mostly begrudgingly. It seemed like the market didn't want to go down, but was being overwhelmed a bit just by some continuation of these negative headlines. More headlines, and I guess we're about to get a press conference right now, so we might get a further resolution of this. But um, the headlines, despite what the United States seems to be saying out loud, everywhere else seem to be pointing more towards U.S. involvement in Iran, which that brings in a whole another country. And then the question is, was every other country in the world sanctioned this at this point? In which case, it's not that big of a deal if the United States is getting involved. Or are there going to be other countries that have a problem if the United States gets involved, and then those countries get involved? I don't have the answers to those questions, but it'll impact the market. Uh, we had discussed yesterday, and then Pete in the VTF looked at and provided some data in the pre-market that was very similar to what I was looking at from Deutsche Bank yesterday, which is like what I had seen. What I had seen, I guess, 2 nights ago was that in these types of events, usually you get a 7% sell-off over the course of 3 weeks. I think that Pete's look back was a little bit longer than the one that I was reading, and he said a 4.7% sell off over the course of 19 days. As far as I'm concerned, it's more or less the same. But the bottom line is that as of yesterday, we were up on this. Usually, what ends up happening, I think Bill Kay was saying something about this earlier. What we typically see with these situations is that you sell off in anticipation of the war starting, and then once the war actually starts, once there's boots on the ground, oftentimes that's a bottom as well. It's certainly what we saw happen with Ukraine Russia. We sold off heavily into it, and then on the day where they actually invaded, we gapped down huge and we bought up to green, and that was a short-term bottom for the market. What's unique about this situation is that we have not gone down at all in anticipation of this event. So uh, this is what I noted. We are reminded similar to the Gulf War, which started January 17th, 1991. The market had been retreating prior to the opening of hostilities, but surged after the war actually started. Yeah, again, it's a very, very similar concept to what we saw with Russia Ukraine. But the situation here is that we haven't sold out on this at all. So maybe this is different. Maybe it's, oh crap, the United States is getting involved and we are trying to blow up the underground nuclear facility in Iran. And I don't know if that requires us to drop a tactical nuke or not to be able to do it. There's never been a nuclear bomb dropped in a war in my lifetime, so that would be new territory. I don't know if it's needed or not. I'm not a war expert, but this almost maybe is a different situation because this market has been ignoring it and saying it's not going to happen. The US is not going to get involved. We had one relatively small down day on Friday, and that was even in front of a weekend. Could this be a situation where it actually is the opposite of what we saw with Ukraine, what we saw apparently with the Gulf War, where on the US involvement, we don't actually begin to sell off? I don't know. All I know is that market structure or market dynamics seem to really dictate everything in this day and age. And I doubt that the market dynamics were the same in 1991 as they are in 2025. As a matter of fact, I'm sure that they weren't. Um, and we know that this market is very, very insulated from any downside movement. But guess when you potentially begin to open that up, excuse me, it's not this. It's not a coincidence that the first sell-off day here in February, right after we made all-time highs, was OPEX day. So we have a little bit of a window here, I think more or less starting tomorrow. We also have the Fed tomorrow, through the end of the month, where we could actually see the market change. You'll lose that downside data support that has been holding this market up. At the same time, we don't have corporate buybacks buying back in the same way. The Goldman Sachs note this morning said that they think that 40% of corporates are in their blackout window right now, so they're not buying. And I wonder when I was watching this downtick starting at 12:30 today, from 12:30 to like 2:30, when we actually somehow went down for 2 hours, I was like, what would this look like if corporate buybacks were still ongoing today in the same way as they were last week? How much more muted would this actually be in the middle of the day on those headlines when we actually went down? I mean, this market never goes down. We actually went down from 650 to 579. Not a huge move by any means. And it seemed like I was saying before, it seemed like a struggle. Like the market still did not want to go down, and it was really battling the support side of that island condor. It did not want to go down, and the headlines forced it. And that's what the people buybacks not being involved anymore, and vol control's not buying anymore, and CTAs are maybe buying small. So a lot of the systematic bid is a non-event right now. We still couldn't even really trade down. And I was like, wow, what would happen if the group of buyback was ongoing? So we'll see. We've got a little bit of a window here, but I think once you get to July, we know that most likely vol control is going to start to buy again once we see some major volatility here at the end of June. They'll be buying again, and July has a lot of seasonal strength, a lot of new money flows back in. So we got a little bit of a window here where maybe this market can weaken out a little bit between now and the end of the month. So we'll see. I think we can be a little bit more open-minded now to putting some shorts on. With that said, the market technicals are still really not confirming those shorts. Maybe you could argue this is like a lower high yesterday. It's hard to make that argument, or maybe even an equal high that could lead to a failure. It's hard to make that technical argument. You need to see us lose some support levels to become more confident as a bear. We aren't even going Friday's low. Friday's low is spot number one, and I don't even think it's the most important spot in the world. A little bit more important, I think, is June 5th, which is the Elon Musk Donald Trump battle day, because the 21 EMA has confirmed that. A little bit of an important level is the May 30th low. The really important level is the May 23rd low. At a certain point on the downside, though, if it were to trigger, especially if it happens post OPEX, you could see a feedback cycle of selling that were to come into the market. That's how markets work. You get enough selling that forces us down. I forget where the updates are in the CTA triggers, but you could get that short term or medium term CTA triggers. I think that they're pretty close together in price. And then next thing you know, you could go into a feedback cycle of selling in an environment where there has not been a seller to be found. So we will wait and see. But that's pretty much the spies. I think the Qs look more or less the exact same. The IWM weaker, IWM back below 210, so it seems like it's a little problematic. Under the hood today, some relative strength and relative weakness. You have like Tesla, which we noted yesterday. It's like, all right, the short's looking pretty bullish actually, but yesterday it was super relatively weak. It continued to have that relative weakness today. I honestly think Tesla was down enough. We see these headlines hitting that there's so much oversupply of Tesla vehicles right now because no one wants to buy them, that they're having to rent out parking lots just to put them in, and they're stopping car production for like a week or something like that. To me, that seems like a disaster. The stock could be down more on that, but I guess they're not a car company. But yeah, Tesla really relatively weak. That was off 4%. But then you still had semiconductors to the rescue. And today it was ARM ripping up. The interesting thing is that these did close a bit off their highs. Beginning of the day today, this ARM was just, I don't even look at this name that much, but holy cow, it was today was ARM. WDC was ripping by at one point this morning, but also a notable upside tail in that thing. AMD, AMD yesterday was so strong on news that wasn't even news. And then Lisa came out and basically kind of confirmed that it wasn't even really news. And the stock was still able to be relatively strong, all things considered today. You would think if it went up huge because of chatter around this Amazon deal, that when Lisa Sue comes in, he's like, yeah, I'm at Amazon, but I don't really know about that deal, that you would at least reduce the percentage of what it did yesterday. But no, it's still green, still up a 0.5% within the confines of, a NASDAQ that was down a full percentage point today. Excuse me. Um, Midland also just unbelievable strength in this thing. But hey, maybe we're starting to run out of gas. Big upside tail and ton of expenses, especially on the 21 EMA. This stock has been like 2 to 5% almost every day in the entire month of June. It's been insane. And it was today. It's 4.4%. I think the best pull out of the day from the morning meeting was Palantir. Uh, we said you could short versus yesterday's high, or you could potentially try to put it through 140 because that would be the level of a breakout failure. But the real reason behind that trade was the OpenAI news. That OpenAI got a really big government contract. So my thesis on this is I think Palantir is actually a great company, uh, but very expensive from a valuation perspective. Extraordinarily expensive. I saw a statistic, I think, last weekend that Palantir trades at a similar valuation to what Zoom was trading at in the height of COVID when Zoom was going berserk. Uh, you know, Take a very, very long time to get on that valuation. However, they're not getting time. AI defense, the Lockheed Martin of AI, whatever you want to call it, they're the only game in town. So it's enabled them to hold this valuation because they can grow into it because they have no competition. But guess what? All of a sudden, OpenAI becomes a competitor. All of a sudden, I don't think that this company is worth, never good. But all of a sudden, you got to look at this company, even for the very biggest bulls out there, have to be wondering if it's really worth the valuation that it's trading at. When all of a sudden, there's a major competitor to it. So, finding some weakness, but still, I just don't stick to the 80 amount on the daily. This thing has so much more to do before it can actually look like a broken stop. And then you still have other pockets of the market that are squeezing. There's still some of those short squeezes that we've been seeing. This like EYEN was going today. CoreWeave actually broke out and legged up above 160 today. Uh, Crazy. I guess Circle actually had a little bit of a red day, but look at the extension on that Circle. So there are still pockets of this market where it seems like shorts are getting absolutely squeezed. So that's pretty much all that I've got. I am happy to answer any questions that you guys have. I want to try to do them a little quick though, so I can get out and get some dinner because it's a little late over here in Paris. Cero, CERO. Yeah, there's another one. Up 156%. I don't even know what this thing is. For Mike Reed, with the small down move that happened after hours last night on the announcement that Trump left the G7 early because of Iran, no trade deal announced. Do you think that the market, yeah, and that was should be a big negative, right? No trade deals came from that. Do you think that the market is pricing in an extension of the deadline? No new trade deals next month. I don't know. Probably. It would make sense. We saw like different answers from different people. Donald Trump said he's just going to mail people a letter and mail countries a letter and tell them what they're going to pay in order to work with us now. But Scott Benson said we've got like 18 trading partners that are working really hard with us, and it would make sense to give them an extension. And those are probably going to be all the most important companies. And for Trump, he thinks people use this war also as an excuse to point everybody for their deadlines. I'm just thinking out that 50% tariffs, which is really realize and where we'll probably eventually end up with a lot of companies, 50% tariffs still not good. But we got to see it actually hit the economic data. It has not happened. And tomorrow we have the Fed. And it's interesting. You saw, I don't know how to pronounce the guy's last name, the Fed whisperer at the Wall Street Journal, Nick, I think he's got a Greek last name. Um, Basically come out and say that the Fed would be cutting tomorrow if it wasn't still for the uncertainty that's around these tariffs. And we saw in the Goldman Sachs note that their expectation for tomorrow is a dovish pause, which dovish pause to me doesn't sound like a bad thing because I'm pretty sure that we already were placing in zero chance pretty much of a cut tomorrow. Timorous. Timorous. It took me about 2 years to be able to get McElligott, so give me like three on that one. Uh, Timorous. Um, cool. Uh, so we'll see how it actually plays out. But you know, it's still a matter of actually just seeing it come into the data. I think that 10% is no joke. I think that we're still seeing a lot of unsettling things under the surface, even though it has not shown the numbers yet. But you know, companies did, I think, a really good job preparing for this. They knew it was coming in advance. They got as much inventory in advance as as they possibly could. So it's going to be a matter of, I think, inflation versus growth slowdown on which one is worse. So we'll see. From David regarding Datadog is the 10:20 a.m. 5 minute candle. Oh yeah. Oh, I think that's Solar Edge. Oh, I hate when I forget to add one onto my disclosure because I might get in trouble. I'm short Solar Edge, just so everybody knows. I am short Solar Edge. Boom. Um, Full disclosure, I am short Solar Edge. Datadog on the 5 minute at 10:20. Uh, Hold on. Datadog is the 10:25 minute candle. Your good's gonna go long as it bull flagged. Yeah, a little bit of a bull flag with the ADMA catching up. You could probably just think through 122.50 for continuation there. I think that's appropriate. Um, and yeah, and then you're breaking resistance at the same time, which that I really like. I like that you're combining a 5 minute chart pattern with an important spot on the daily. I like that. And it wasn't perfect, but Super Edge, which was super good on the morning meeting today. I would have liked this to have been a little bit closer to the ADMA, but my thesis was so bearish on this that I would have been willing to jump in a little bit early on that. It kind of gave that same pattern that we like so much, which is a news event, an earnings event, retracement to the ADMA, shooting star, you know, tail in the direction of the gap, basically, and some lower price action after that. It eventually, no, I guess it never actually broke that high. It never did follow through new lows, but you know, pretty decent move if you shorted like $16 to get a move back down to 1440. You had to really kind of a lot of times I don't really believe in it. I wouldn't pay down this much off the ADMA for that pattern, but this one I was super bearish on. I genuinely think that if the tax bill goes through the way the Senate is trying to do it, I think that Sunrun and Solar Edge, probably especially Solar Edge, are zeros. So I want to be aggressive and trying to get some short, even though normally I don't like to chase like so after the 24 yesterday, getting down to 14, 15, 16, 17. And I hesitated on shorting some above 17 pre-market, which was a mistake. I just had a lot on my plate. It would have worked out much better if I did that, but I did eventually get a little bit short, kept a little bit short. We'll see. This thing could bounce back to 18 or $19 though, just because of the extension, even if my idea is correct. So I'm gonna be a little bit careful with that one. But I think that the Solar Edge is gonna end up being a zero. Um, Cool. So thanks for the question there, David. Over onto the YouTube. We got a lot of commentary here on the YouTube. Uh, yeah, like I mentioned, I'm on my travel setup this week. I'm in Paris. Next week, I'm also going to be on my travel setup. I'm going to be in Los Angeles. The mic's not as good in the travel setup. I'm sorry. So doing the best I can. But then eventually I'll be back to a normal computer. Um, from Robert, would you? What sort of room that is very echoey? I think it's a pretty cool Airbnb here. My secret, I've done this 2 times in a row now in Paris. Thanks, Judy. Is to get an Airbnb where you're on like the seventh floor of a walk up. I don't mind that at all, but you get like a lot of bang for your buck. I'm gonna sick Airbnb for the price I spent. It's like 5 rooms within this really nice big dining room here. It has a sick balcony with really cool views. So that's the key is to if you don't mind working a little bit to get up some steps, I definitely don't mind that at all. I actually like it, getting the exercise in. Um, that's my secret. Anyway, I should have said that because now you guys are gonna take it. I do have room for Josh. You can sleep under the dining room table. Anyway, from Robert, would you be considering following as a potential trade signal? The cues were showing equal highs at 10:15, 11:10, 12:15. Let's look at the cues. Yeah, all these equal highs right here, right? Um, around 5:33. However, 5:33 zeros DTE options were showing lower highs. That's interesting. Zero DTE 533 options. Are you talking about calls specifically, puts, both? I would assume that you're talking about calls, but and that would make sense if those are giving lower highs because of time decay. So the time decay there at 533, there's a higher probability of those calls making you money if you're buying them at 10:15 versus if you're buying them at 12:15. So seeing that, I've never ever analyzed a chart of options. There's sometimes in trading options where I wish I had a chart that showed options just for my own execution purposes, more than anything. But yeah, I would assume that that's just related to time decay and not necessarily a signal in and of itself. So there you go. What else? What's next? From Gabriel, this market is frustrating in both directions. I agree with you. Selectively breaking up. Oh God, let's go with this. Selectively breaking up, but new setups failing. We had MSTR short, but ended up getting stopped out at break even into the close. It looked great at first. Yeah, I'm like this market I also think has been frustrating. There's been so much dispersion underneath the surface. If something is strong, or if something is weak, inherently something else has to be strong, and that enables the market to be a lot more stable. So, uh, yeah, I don't know. I agree with you. I don't have anything else to say about it. I did feel like yesterday we had some really good long setups that gave great follow through, but I understand where you're coming from also. Dustin asking if I can look at Gush. Is this the levered one? Which one is this again? GUSH. Yeah, 2x levered S&P oil and gas exploration. So is that the same as an OIH? Uh, except 2x levered? I'm not sure, but I could take a look at the chart. I don't think I've ever created this stuff before. I have options at 26, 28, and 32. Yeah, I mean, I don't know when they expire, but generally speaking, I like it. But the degree to which you get paid depends entirely on the degree of this new situation. So I like it. Oil names, XLE names, OIH names are my favorite thing to be long this market right now. And honestly, they're my favorite thing to be long this market even before Friday. And Friday just added to it. So I like it. Yes, exactly, Gabriel. Gabriel's saying this market feels like a magnet. Uh, Move up, then back down, move down, then back up. Yeah, magnet that slowly pulls us higher though. So, we'll see. Again, yeah, sorry, Kevin, I'm just traveling this week, so this is my travel setup. When I'm back in New York, everything should be back to normal. From Cyril, the selling today to end of session seemed different than those new dips, more orderly. Yeah, more orderly would be one way to describe it. To me, it seemed like it was bottling to move lower and just running into still a decent degree of buying, but not as much buying as there was selling, and that's how we were able to actually move down. So yeah, I mean, we'll see. Like I said, the daily chart technicals are still intact. Markets are closed on Thursday, so that adds in an extra layer of uncertainty. It reduces a options day to OPEX. So that'll be interesting. Um, do you consider SPY breaking the ascending channel and pitting slightly lower low on the daily a potential reversal setup? Is slightly lower high, I think you mean? Well, that's what I was saying before. I feel like when you're asking for corners, it was one of the first things I saw when I was reviewing the technicals. I was like, maybe it's a lower high, maybe it's a lower high, and maybe that actually means that we're losing some of this momentum here. It's close to the previous high with all the news that's been ongoing. I feel like I'm reaching. But I'm noting it. I think that we could break into a feedback cycle of selling on the downside if we actually break through some key levels. Um, yeah, so we'll see if it breaks that for sure. Someone's asking me to look at the Aussie dollar and the Japanese yen. I don't trade currencies. I look at them a little bit via ETFs. I really don't go through all the different currencies. I'm really sorry. I can't give you any genuine feedback on that. The dollar had a very strong day today, which is interesting. So, the dollar, by the way, is also a safe haven trade. When you're thinking about safe haven trades, generally speaking, you're thinking treasuries, you're thinking the dollar, you're thinking gold. Some people might argue Bitcoin, though it's yet to really be able to prove itself in that regard. So dollar getting bought up, TLT getting bought up, stock market going down, oil up. All of this seems like it's a fair trade related on the Iran situation. So I assume that the Aussie dollar and the yen got hit a little bit today, but I don't even remember what the ETFs are for them because I trade currencies not at all, and even relatively rarely even look at the ETFs for them. So sorry that I can't give you more feedback there. Um, when prices are going sideways, zero GTs must go lower because yes, exactly, because of the decay. And they decay very fast, especially as you get into the close. Good stuff, Dustin. No problem. Keep it up. All right, gang. Looks like I went through everything. I'm gonna wind down and go grab some food before it's too late. Have a great night, everybody. See you all tomorrow. If you're in the YouTube, despite the sound not being that good today, give me the thumbs up anyway. Have a good night.